Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Branchout Foods, ticker symbol BOF. And so here I am recording this on Monday, October 7th in the evening after BOF closed at a price of $1.38, being down about 8% on the day, but then, going up about 5 cents in the after hours, which represents about 3.62%. And so, yeah, I just wanted to go over the chart because it was requested via a poll, and, I feel kind of bad that I haven't gotten into it yet. And so, with this stock, I'm not that familiar with it. I don't really know that this will be that popular of a video. If you do want me to follow up on it again in like a week or so, if this gets 100 views, I'd be happy to do that. But so for this chart, what I typically do with my analysis is I just draw a Fibonacci retracement and see if that lines up with anything. And so from this, I would just go from this low over here at 609 up to that high of 411, do a Fibonacci retracement, and I would look for this pulling back to around the 786 retracement. And I just so happened to, do this retracement before starting the video, and it's a pretty cool fit. I happened to just have the 786 on it as I, was drawing it. I didn't adjust it, and then just going up to the high here at 411, and it looks like, BOF pulled back to the 786, which is at a price of $1.35.8, so right around current price. We actually did get a low today of $1.31.1, and so, maybe it's at support now. But with that being said, it does look a little bit risky because there is a gap here. And so I'm just going to draw that up here, and that's going to be based on the closing price from August 27th, the day before this gap up. And that closing price was at a price of $67.1. So 67.1. I'm just going to adjust this to be at that exact price. And the way that I like to draw my gaps that are not filled is by thick dashed blue lines. And so, that's kind of the risk from current price. That's, is it more than a 50% drop to the downside? Yeah, it's about a 50% drop to the downside. So definitely a lot of risk there, but maybe it is starting to find a bottom here. So, I would look for it to be holding 135.8. If there is a close below that level, I don't think it's that big of a deal, but then you'd want to be looking for confirmation of that breakdown. I don't really know if this level is going to be that significant, but putting in a close lower than the low from today of 131.1, $1.31.1. A close lower than that would not be so great, so I would be cautious of that. But yeah, it could be potentially consolidating there. And then so, some other things that stand out to me, thinking about like the MACD here, there's this nice, switch from kind of flat to green, big move up, and then it's kind of come back as, negative red here. And so I'm just going to read some of the numbers that are in this histogram number here, which is really just the difference from the MACD and the signal. As far as I understand it, it's still fairly new to looking at that indicator myself, so take it with a grain of salt. But what we can see here is it does look, actually, I'm just going to zoom in a little bit so we can maybe see it a little bit better. So over here, it looks fairly negative. Histogram says negative 0.13. Over here, negative 0.12, so getting more negative 0.13, 0.1289, 0.129, 0.12, 0.1168. So this seems like it's becoming less negative, so maybe it could be flipping green, so maybe there's some hope there. One thing that I feel like is a little bit concerning, though, is that I would like to see the RSI come back below 30. When it's below 30, that means it's oversold. and then it's potentially finding a bottom there. But it could also, hang out below 30 for some time. Currently, the RSI is at 40.18. So maybe we could start to see it turn around. I feel like the MACD kind of supports that. Volume has just been completely absent. So it would be nice to see some surges at volume. So I don't know if there are any catalysts for this. Definitely seems like it's risky with a 50% potential downside there. But with this pullback, it has come back to the 786. Maybe it respects that level. And does that level correspond with any prior price action that could suggest that level might be support? There was some consolidation, over here below that level, so maybe that's support. And this was consolidation above that level, so maybe there's something there. But I think it is, kind of, hopeful. To be thinking that this could be going up, that it could be finding a bottom. It could take a month before, it starts to go up. But let's see. Let's look at these patterns in the past. We've seen, big move to the upside, and then it came back lower than it was. Let's see. Yeah, lower than it was over here. So it's more than 100% retracement. Same thing over here. Big upside move, but then a pretty big downside move. So it doesn't have to stop at the 786. It doesn't have to stop at 60.9 cents. It could keep going lower. If we look at kind of the oscillation between, the green and the red here, we've had these nice little green humps. And, we had a nice little green hump here. Do I think that this red hump or red valley, whatever you want to call it, could be turning around? I think it could be, but I think it also could be prolonged red for quite some time, so good to be cautious. Following this big move, we saw it come down, and then once it flipped green, that was the beginning of it going up. And from the top to the bottom, that took place over, let's see, 49 trading days or 70 days, a little over 2 months. And then so from this one, from there to the bottom, that was 82 trading days or 119 calendar days. And so, yeah, I feel like maybe this could be finding support there. But another thing that we could consider is if I just take, a measurement from the top here to the bottom side there, that was 34 calendar days, 24 trading days. And that came down to the 786, 34 days. And so let's just look at, over here. Let's see from this first one, let's just look at this as an example. Got the low over here. And so let's say from the top, let's do 34 trading days. And so that's right here. So there's that, the time frame that we're currently at relative to the most recent peak, same type of thing. And so let's do another Fibonacci retracement, 110 up to 360. And so that had not, by this time, pulled back to the 786. It took a little bit longer. If I move this over here, that, took, let's see, 50 calendar days. So maybe there's something. I don't know. That's just some information. I feel like overall this is pretty risky. I don't have a position in this. I don't plan on getting a position in this. I've never heard of Branchout Foods, other than when this was requested in the poll. So yeah, I feel like this is kind of a risky one. You also got to think about it from these lows here. What kind of move did it get? 575% move to the upside, and now it's retraced a good amount of that, come down 68% or so. I think it could bleed more, so I think it's good to be cautious, but maybe there's some hope there with the 786. And with that MACD becoming less negative, although still negative, it could be finding a bottom here. And maybe it gets a move up to, I don't know, see this this dip here, this valley, that could potentially be resistance because there's price action above it. There could be some sellers there that keep the price down. So if, let's say price were to go from the 786 up to around that level, that could be about a 40% move to the upside. I think that's a really nice trade. But, on the other side of that, 40% up to there, 50% down to here. So pretty risky either way. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more content like this. Thanks a lot for watching. Take care.